So the Federal Reserve consensus is that they are going to possibly lower the federal funds rate in September at their meeting. Obviously, we would like it to be a half a point, but it looks like it's going to be a quarter point. Now, the federal funds rate is the bank rate in which banks lend to each other and also in which the Federal Reserve lends to banks overnight. So that is the start rate in a sense, because that is the rate at which banks borrow from each other. Then there is a margin on that, and then there is the long-term rates that are your 30-year, 15-year mortgage rates. What happens is when the Federal Reserve drops the Fed rate, it's going to lower your credit card loans, credit card rates, your car loans, your home equity lines of credit that are adjustable. Anything that is adjustable is going to start to drop. Now, they don't control long-term rates, but what happens is that trickles down on long-term rates because the cost to lend goes down. So at the end of the day, this is the time that you need to be talking to your trusted mortgage professional about what the strike rate is that you're willing to take on a refinance, because there's been a lot of people sitting on the sidelines waiting. They purchased homes at 7.25% interest rates, and they're waiting for the right time to get into a lower rate. I will tell you that if you wait a little longer, you're probably going to see lower rates than what we will see immediately, maybe in October after this Fed meeting. But it's important that you get your ducks in a row, get your credit scores ready, get your documents ready to go, because when we see the rates drop, it could be fast, it could be a quick drop, it could be more of a gradual drop. But you have to be prepared to take advantage so that you can go ahead and get in and get those monthly savings if you're paying a higher than market mortgage rate right now. So if I can help with anything, please let me know.